Hello, hey Scott. Hey Jamie.
Steve, greetings.
Greetings. How you doing?
I'm doing quite well. Is it Christmas in June right now? Because I kind of have those feelings, like it's Christmas time after the past few days in the market that we've had. Pretty pretty interesting action, I must say. So the good part about that is we've got a load of cool things to share with everyone today. Looks like you've got control, so
Yeah, I'll just start her off here. Talk about what we're going to do today, June 30th, which happens to be the end of quarter two. And did we go out of the end of the quarter with a bang for sure? But before we get to that, yeah, the disclaimer, make the attorneys happy. Just remember, we are content publishers. We are not registered investment advisors or brokers soliciting investment or trading advice. Everything you see and hear should be construed as content publishing. It's not a solicitation. So you see it all there in the black and white, and the lawyers should be happy with that. You guys get the gist. We're going to move on here. Today, agenda, June 30th. Interesting market to recap. There's been a lot of interesting stuff going on in the last week. So we're going to go through a little bit of that and maybe talk about some ideas and some underlying themes. The trade of the week was not done last night. Normally the trade of the week webinar is done, but we had a different audience last night. So we're going to kind of kick in and catch up with what we were going to talk about last night, because there's some interesting trading lessons in there, I believe, that some people might take some goodness away from. We'll go over that. Expectations for today's trading sessions using a couple of Jamie's windows. I'll send it back over to him when we get to this point, because he's got a great example of using the compare account window and using the SPY watcher, and most importantly, how we focus on volume, 1 minute volume. I don't think there's too many people outside of the Trade Ideas technology that are able to focus and monitor the 1 minute volume the way in which we are. And then Holly's performance today in trade arounds, a very interesting day, especially for the trade arounds. A very highly statistically probable day, which was nice to have considering all of the highly statistically noisy days we've been having for the last couple weeks. So we'll delve into that as well. And if time permits, maybe a few setups to go over. But for now, let's just get right into it and go to the daily chart on my screen here, looking at the SPY. Oh boy, looking at this on the short side, the sellers that have been trading this market with a preconceived bias notion to the downside, and trust me, they're out there. Not everybody has an open mind as to which direction the market's going to go. I think a lot of people look at the data, they look at the politics, the elections, the employment, whatever you want, and include Brexit in there now as one of those other reasons that the shorts got real excited last week, thinking that this was going to be their big break. And if we recall, this giant candle here on Friday was our big break, and many charts followed suit. And then we had a follow-through on Monday, Tuesday, Wednesday, Thursday. Here we are. We bounced right back up to pretty much where we were prior to the Brexit news. So once again, it's like Lucy holding the football for Charlie Brown, taking a full-on run right here, and the ball gets pulled away yet again. And I mean yet again. It's just an ongoing thesis, whether it was this little dip back here and that dip was meant to be bought. This time we actually had a catalyst with the global news. And I think today we can all agree that the market didn't really care as much as maybe the bears or some people thought it might have cared. So once again, we're still in buy the dip mentality, and it just continues to show the flavor and character that this market has. After today, we are right back in this crazy range, and so the crazy range comes back into play, of course. But I think given the springboard bounce off a trampoline, how the bears got their heads basically chopped back off, I would not be surprised again to see us coming up and challenging the high end of this orange line, in which we always remind you guys every time we get into this little margin here, it doesn't seem to last long. The sellers seem to really show back up. That happened here. Didn't quite there, but back in these margins here, we don't last long before the sellers throw us back down, and this is just the unbelievable upside resistance that we're working with. So coming off the heels of this Charlie Brown football fake once again to the downside, I feel like or the path of least resistance is probably going to be back to challenge the lower end of this margin again and see what happens if we can get back inside this alleyway. Any thoughts, Jamie?
No, I agree with everything you said. What I'm looking at is go a little bit further to the left. You see the bottom of those candles there, right? No. Back over. Down a little bit. Like, for example, if you were trying to establish a stop loss on this trade, go up just a little bit to the bottom of those candles, right? A lot of people would have said, yeah, that's it, right? But this pattern is not immune. It's just like every other pattern. And coincidentally, we look back at that red bar on the right, everybody was probably thinking that that was the safety net, right? And of course, what happened? It goes a little bit further than what you thought. That's just my observation here, because this pattern is repeating itself with many other stocks, very similar to what we see on the trend change lubricant, which is a good segue into that trade of the week that you called, right? Because that act is very similar to what we're seeing here. A lot of people probably thought the safety zone was the bottom or even the wick of that green candle just to the left. If we go over just a little bit further, right there, right? But look what it did. It even penetrated a little bit further, got everybody out before the bounce. So it's just an observation that I see this, you see it all the time, and that's exactly how you got the fill, or you called it on the FB that you're about to show everybody.
Yeah, so we're going to take another exercise in looking left, but we're going to look left on the charts for different reasons this time. And I'll try and set up real quick. The word buoyancy just comes to mind. It's like you're in a pool and you push that beach ball down underwater and let it go. All right, that's where we are. So the path of least resistance, I think, is continuation higher, whether it's more green candles or whether maybe it's a pullback and some sideways action. But if we could not break this market based on these technicals and based on the fundamentals coming out of Europe, then the path of least resistance is back up. It seems to have negated the bear's one and only chance here in the recent memory. So let's go to Facebook. Now, you guys recall, put yourself in our position on going into the weekend. We had that horrible Brexit candle that we looked at. All the charts were broken. There wasn't really much to get excited about in the way we pick our trade of the week, scanners and end-of-day scans, and kind of create a small short list. And then over the weekend, we're all in contact with each other, Dan, Jamie, Andy, myself, and we kind of come to a conclusion as to what might be the best flavor to choose out of that small list of stocks for trade of the week. And then it's written up Sunday night and put out Monday morning. But this week, we could have easily said, yeah, like we did 2 weeks ago, if you all recall. We had a no call where the volatility was big. Holly went into a Friday with no trades, a lot of blank windows, a lot of noise, and we just said, you know what, this is a great week to do. Trade of the week is CASH, cash as in cash as a position, no trade. Sit on your hands and prosper, all those axioms we talk about. Jesse Livermore said the biggest money he ever made was when he was sitting on his hands because he basically wasn't putting money at risk in statistical storms. But we didn't want to take that out again this week, even though we had a pretty wild, crazy close on Friday. So it warranted a different type of entry where we normally look for possible breakouts on our trade of the week entries to trigger as the price comes from below and moves up through it. This time we want to talk and highlight about the virtues and strengths of using pullbacks, pullback entries. You've seen us talk about pullback alerts and set pullback alerts on our webinars into our price alerts. But for this particular one, we had Facebook showing up, but we all agreed that the market has a funny way of just trying to fill these gaps. I'm going to show you a couple quick examples. Back to SPY. I think I may have even talked about it. This particular day, I'm going to zoom in. This particular day right here, this green candle had a really rough morning on the open, but we highlighted the fact that, hey, the bottom end of that candle wick actually corresponded with this gap right here. And so that was kind of a no-brainer to see it bounce off of that gap like stocks often do. They try and retrace to the most absurd level they can, and many times they may reach down just for a little extra special oomph to get in to fill those gaps. Well, that's kind of what we had, again, on Facebook. And Facebook, we basically took the top of this candle right here. Again, this was great earnings, chopping around, and right here, this candle, this was the day before the Brexit, or the day before the Brexit. Actually, it was the day before the Brexit, because this was the Brexit, and then Monday, excuse me, this was when the trade went active on Monday. So knowing that we still had this void down here, knowing that we were going to probably have some market weakness, it just made the most perfect opportunity to create a pullback alert, which was conditional. So when the trade opened up, the trade of the week was not active, but we traded down, and then triggered the exact close of this gap, which was 108.94, I believe, and the stop was essentially right here underneath that wick, I believe around 126.20, I can't recall, but giving a little bit of wiggle room below that wick. So when we talk about contrarian entries, these are the ones that can really help you with staying power, because I think we all agree when we buy breakouts or buy certain stocks, it's almost like a bucking bronco or a bull. It's hold on and try your might to not get shaken out of this trade, because the price action just seems to have a funny way of trying to shake people out. And so when you follow that type of methodology, these people that were here probably got stopped out miserably down here, but this is their contrarian entry, which makes sense at a gap close. If it didn't work, we would have had maybe $2.5, $3 worth of slop, and we'd have to cut it and let it go. But still, it's a good entry, because when you nail them, there's very little pain involved. And I'll show you the intraday chart. There really was only about 70 cents worth of pain involved for about 2 or 3 hours here. And then the price closed, bounced back up right at the close, and closed right on our trigger line, which kind of gave me a good sense that I think that might have been the worst of it. So again, identifying other people's pain can become our proposition and our opportunity. Let me just quickly go to the 15-minute chart so you can see exactly what I'm talking about on the actual day itself. Here's the day itself. We opened up, big push down, couldn't work out, and another push down, still consolidation. Then this first push down triggered that green line. I had that green line on my price alerts triggering the opening of the trade. And at first blush here, it was hardly any pain at all. It was a down and an up, and we were immediately in the money. And then the market continued to sell off in the afternoon, so we had to do a double test here. And again, it was only 60 or 70 cents worth of pain, a nice close right at the entry line, feeling better, and then a wonderful gap up, and then it was just gonzo from there. And I think this thing has produced 4 or 5% since then. I want to show you a couple other examples that I've found in the last week that I think are interesting. Ex-US Steel had a pretty nice pullback during the Brexit panic as well, and oh, look at this. What do we got here? A perfect gap fill. I'll just keep my horizontal line right there so you all can see that. I mean, it's probably almost to the nickel or the penny. Beautiful gap fill. Well, this one pains me because ETSI was once a trade of the week up here on the breakout. We had the failed breakout, and as soon as we got below the failed breakout level right here, the trade was closed. We had some more further downside, of course, with Brexit, but oh my, take a look. What happened? If you just look left, sometimes you'll see sometimes these pullback areas, they have a reason for pulling back to the levels they do. And so we want to talk really about reminding people to use your price alerts. They're here for you to pull back, create a price alert on the pullback, and watch the price action if they trigger. They might not always work, but for the most part, they're a much easier entry if you can get them just right. DTEA didn't have a gap fill, but it's another example of what I was saying earlier. This was a great trade by Andy in the live trading room when Barry was gone and Andy was filling in for him. Zoom out a little bit. I mean, you can see, and plus this one had a pretty good short percentage as well. Once it got above this breakout, we had a nice wick, but that wick followed up with selling and closed back down in the range, and then basically got people spooked. The next day was a red bar of punishing, running the stops of everybody that bought here on the breakout, putting their stops in here, only to see it stop, turn, and bounce, and go higher. Well, there's even more to the story. Maybe you were frustrated that you missed this and you didn't want to chase up here. Well, you've heard me talk a lot about prior breakdown, prior resistance can become future support. Well, once again, we had a pullback running the stops of everybody that bought late here, and the stops leveled off at the prior breakout point. So, look left, look for gaps, look for prior breakout points that were prior resistance to become current support. And if you miss the trade, if you feel like the train left the station, nothing, it only takes you 15 seconds to just go in here and pop in a pullback price alert to where the trade originally broke out from, and sometimes you'll get a really nice pullback entry. So the nice thing about pullback entries, again, is you're playing off other people's pain. The chances of you having to sit through a stop-loss hunt with everybody else are probably much less, because if you do it right and identify it right, you can play off other people's pain and identify the areas of stop hunting and looking for gaps and closing of gaps. So that was the theory and the reasoning behind the trade of the week for Facebook this week, and we're pleased as punch that it worked out. If anybody did take it, we've got some resistance right here. We've got a little narrow range bar after a really nice bounce. These might be the places to take off a third, or take off a quarter, or take off a half, because you've locked in profits, you've made a good trade, and then you can move on and just kind of let this thing work, and maybe it wants to work itself back up to 120, but you've taken a good chunk off of the really nice springboard move. But once you get into these levels of resistance after a few days of run, these are where it makes sense to start scaling out. So that's my sermon on the trade of the week and the benefits and virtues of the pullback entries, which, matter of fact, I might as well just show you this. I'm going to have to clean out my price alerts because it is the end of the month, but it's been a decent month. What I'm seeing seems to work. I'm triggering some from above, some from below. Some are long, some are short. Not all of them have triggered, but it's been a good month in terms of the strategy method that I've been trying to lay out because of the P&L, $56, a really nice steady grind. This is the kind of P&L price alert that you do want to see. There was an example I had. Maybe we'll get back to those later. But yeah, that's all for me on that portion. I'm going to turn the screen back over to you, Jamie, unless you want to add anything.
No, as always, Steve, that's some beautiful chart artistry.
Chart porn.
Chart artist. Okay, moving right along. So as some of you have heard Steve and I speak about in the past, talking about, okay, first 30 minutes, it's kind of all bets off unless we just pick a major direction and just start motoring one way or the other. But most of the time, there's a little, it takes a little bit of time to get some type of pattern developed. But what I'd like to talk about today is how can we arrive at expectations, say within the first 20 to 30 minutes, what can we do to help ourselves kind of size up the day? In other words, know what to expect from the trading day. And before we go into that, I'll just pull up the daily once again on the SPY. Kind of stretch it out here a little bit. Okay, so obviously Brexit, crazy action, bouncing off the bottoms down here, and then 1, 2, today's the third day up. So, even before today occurred, a lot of energy was expended bouncing off this bottom here. So, you never know when the energy is going to run out, how far it's going to make it. So, as we like to say, it's never about predicting, it's simply about reacting. So, with the expectations for today's trading session, the CC window, compare count window, and the SPY watcher proved to be pretty invaluable today. So let me show you what I'm talking about. Make sure we have that here. We'll look at the intraday. Bear with me a little bit. My system is a little sticky today. All right, so here we are looking at the SPY on the intraday for the 5-minute. You can see I've got a big, well, this showed up a lot better when I was using my darker background charts. The yellow is a little harder to see here, but hopefully everybody can see that big yellow arrow there, pointing to this area right here, which is approximately 30 minutes into the open. So just going to pull my little presentation sheet back over here. And first we're going to talk about the compare count window. After the first 30 minutes today, the compare count was what you see right here. And just to clarify, turbo breaks up versus turbo breaks down, which is what I perceive and many others perceive to be not 100%, but a very good sampling of the most actively traded stocks on any given trading day. So after the first 30 minutes today, these were the readings: 53% red, 47% green. And so what exactly does that mean? Well, some of you might be familiar with these metrics already, but for those of you who might be seeing this for the very first time, I'll try to sum it up as briefly as possible here. Anytime we see a bias of 60% one way or the other, there's a pretty good chance that that is going to be the market direction that day. Now, anytime we go below 60% one way or the other, especially below 55, as I said to Steve, as soon as I saw this morning, I'm like, this is pretty much about as abysmal as you can get for a most active count, because it's just undecided. 53.47, that's what we had after the first 30 minutes today. So I don't have it handy today, but basically what I put out on my Twitter feed was that, hey, you better be very selective today. So here we go, right here, approximately 30 minutes in. Now, coincidentally, while that was unfolding, we did have the small gap up today, right? Prior close right about here, open today here, small gap up, wicked out at the top pretty quick, and then we started seeing these red bars here as we came on down. So, of course, everybody's got the same thing in their head. Are we going to fill that gap? Are we going to go flirt with these lows? I'm just going to expand this chart out a little bit here. So we have this bar, then we try to, we tickle this area right here, and then, of course, we wick right back up. We try again, we wick back up. Now, first and foremost, the wicks in and of themselves are telling us something, because this was a very quick move. Sellers tried to take control. Nope, it's just like that beach ball that Steve was using as an analogy in the in his comments on the SPY earlier. They take the ball down, it pops right up. They take the ball down, it pops right up. Now, pretty obvious there. But how do we pull the rug up and get even more information on, is this the bottom? And of course, we're not in the prediction mode. We never predict, but we react. So when we see the beach ball go below the water and snap back up, not once, but twice, and then we're watching another window to help us figure out that action, which in this case is the good old SPY watcher. And the volume tells the tale every time. Whether it's a pattern continuation or volume exhaustion, looking for a reversal from the top or the bottom, this is exactly what played out today. Now, I took a screenshot, but this is kind of illegible. You can kind of make out the volume levels, and this 707, I believe it was 650 to about, what do we have here? This bar was the 725. So this little area right here where we tried to penetrate, we're looking from 655 right to about 705 Pacific Standard Time.
Yes.
Yeah, West Coast time. Let me clarify that. Add 3 hours for East Coast. So I just pulled this little guy out and reviewed the history. So now hopefully everybody can see this a little bit more legibly. So here we are at the 650 area, which coincides perfectly with here. So 650 to 655 was here, 655 to 7 o'clock here, and then on to 710 here. So as we're starting to hit those lows, and by the way, this is historical, we're seeing this the way it looked at that time. It's all over the place. SPY, new low, new low, new low ask. But here we have the 1 minute volume. So as all these events are unfolding, and as SPY is bouncing off, wicking out right here, I'm looking at these volume levels, slightly above normal. And if we scroll a little bit to the top here, 651's here, below normal, 100 is normal, still below normal. Now we're up into the 7 o'clock bit right here. And if I scroll through here up and down, you can see that the volume levels during this period right here barely got above normal. And for those of you who have heard Steve and myself speak about this topic before, whenever we're looking for a penetration and for a stock to head lower or a stock to head higher out of a range, typically we have to see high twos, 2.5s, and preferably even 3 times normal 1 minute volume to get it out of that channel. So the whole time that I'm watching these little wicks occur, I'm watching my good friend here, and it just never happens. Here we are, getting up into the 705 area as well, and here we are into the 710 area, okay? And these volume levels never went above what you see here, maybe 120, 20% above normal. So simply because I'm so used to seeing this, Steve is so used to seeing this, we're all so used to seeing these levels, there was never a guarantee, ladies and gentlemen. But if you have access to that data, then you were pretty much telling yourself, and let's see here, where is that? I just captured this just so everybody could kind of get a feel of what it was like in real time this morning as this was unfolding. So, here we are, and of course, on this timestamp, because I'm in Texas right now, Skype is still in Central Time. So we can see here, market opens at 8:30 here, but right here, 30 minutes into the open, I'm like, well, Steve, it looks like this could be the bottom, and hopefully we're going to have a slow grind back up, right? And then we can all see exactly what transpired here. The wicks told the story. What did I do to confirm what I thought was going to happen? I was watching my good friend here, Spy Watcher. He reaffirmed, or we could call it he or she, reaffirmed what I was already thinking. So there was never any prediction being made. There was only reacting to this action down here. And you've probably heard this over and over again, no matter who is talking about the markets, and that is, if you don't have an edge in the marketplace, then you might as well hang it up right now. So not only do we have an edge with Steve being a chart artist and telling us about these levels of support and resistance and looking to the left, but when we see action, price action like this, and a failure in these wicks, and then we have something reaffirming what we're seeing on the charts, it's a win-win situation. Now, let's not forget about the compare count in the first place, because that was the first tell. It was going to be tricky. We went to the bottoms. We couldn't penetrate, and I never saw anything above just slightly normal volume on the Spy Watcher.
Yeah, 100 being normal, right?
Exactly. So, it's not a prediction. It's taking in all of that information and going, yes, this seems to be the reasonable course of action. So the bottom was put in, and then it was off to the races. Now, for those of you who were watching Holly this morning, what I'm telling you is actually reaffirmed yet once again. So let's go ahead and dig into the Holly
before
trade.
you do that, I know a few people are going to want to get a copy of the Spy Watcher that you just sent. So if you're able to use the plus key on the toolbar on the GoToMeeting, there's a chat window. You got to open and expand that chat window, and I've already dropped it in there. Don't worry. I've got a copy of it myself. I dropped it in there, and you may notice it's got what's called a 1-minute filter, which means if you do not currently have the 1-minute filter, normally we call that U99, it's something you're going to have to request, and we can drop it in for you on the back end. So in the chat window, there is a cloud link to that actual window, and then also the instructions on how to request minute volume custom filter. Just email info@trade-ideas.com. That'll be dropped into your account within 24 hours or so. So everything you're seeing here that Jamie's talking about, can be duplicated on your screen. You just need to accept that cloud link, and then find a way or find the 1-minute volume custom filter, which the easiest way, honestly, is to just request it, and we'll drop it in your account for you.
And the good news is, Steve, since this is a multi-strategy window using alert windows, the 1-minute volume is already resident within the alert window. It's only on the top list.
Okay.
We have to
Interesting.
insert that filter. Yeah.
You should have it. You should have it good to go. Plug and play on the Spy Watcher there. Just use that cloud link and load from cloud. Copy the link first and load from cloud, and then you can start to watch and monitor the SPY the way Jamie's demonstrating in real time.
Right. And before we move on, I just would like to point out, you can see the range here that I carved in after these highs and lows have been put in. So the beautiful thing about this is that, probably some of you out there have heard Steve and I talk about when you want a pattern to continue, you'd like the high volume. For reversals, it's typically volume exhaustion. So one thing is completely certain here. Once you absorb the information in real time, it was clear that volume had been exhausted. It was telling you this right here. So if you have a pretty good feeling based on the information that's come to you using your edge, you're like, hey, the bottom's put in. Wouldn't be too far of a stretch to go, I'm going to go ahead and get long here and use these wicks as my out. Or if you're not comfortable down there, look what happens. As we creep back up here, one of the easiest patterns on the planet to identify is a range break. So once again, whether you participated in the SPY down here or whether you just used it to go, you know what, I know I'm in poor longs right now. I think the SPY has put in its bottom based on the metrics that I'm being fed here, so I'm going to hold them. Or maybe you took a little bit of SPY as well when it cracked out of this range and continued higher. But as Steve and I always like to point out, this range break is a fractal pattern. So whether it's on the intraday, 5, 10, 15, 30, or whether it's on a daily, it's a very reliable pattern to participate in. So there was a lot of opportunity in the SPY alone today. But one thing I'd like to point out before we move on to Holly is that this isn't just a SPY watcher. It's whatever type of watcher you would like it to be. So in the future, maybe you're in Apple, or maybe you're in Google, or whatever other pet stock you like to trade. Maybe it's a volatility index. Maybe it's UVXY. Maybe it's some ETF, and you're in it. And you're trying to figure out what are the, how can I really get the most out of this profit, or whatever might be running through your mind. It's real easy just to duplicate this window like you can do any other trade ideas window. And all we do is we come in here and change the symbol in each strategy. Change that to Apple in both strategies. Rename the window. Now you have your Apple watcher, your Google watcher.
Or the Qs.
The QQQ.
IWM.
Very useful tool for keeping your fingers on the pulse of a single.
That's a good question. Let's catch that, Cal. He's asking, well, could you put 3 or 4 multiple symbols in that window? Sure. You just got to keep track of them.
That would be a little bit of overkill, and what I mean by that is because look at how frequently we're being fed information about the SPY every so many seconds. So imagine even having 2 symbols in here. It would probably be way too hard to keep up with unless you're putting multiple symbols of some stock that doesn't trade very much.
Or create a sister window, or duplicate that window and add a different symbol in a separate window. Might be
right,
easier.
And the reason it's so busy is because on the green side, we have every bullish alert in there. That's what's feeding us that valuable information and telling us. But then again, the focus is to key off of these volume levels. So once again, it's a very simple methodology, but very, very powerful.
Can you show how, one more time, slowly, how to change the symbol in there if somebody wanted to? A couple questions asking for it.
First, we just give it a right click, and since this is a multi-strategy window, we just hover over strategies. There's only going to be 2 strategies in there. The red, where we have all the bearish alerts checked off, and the green, where we have all the bullish alerts. So to change the symbol, we just go into configure, like so. And you'll notice this is the exact configuration area for any alert window. So all we do is we pop over to symbol list and simply change the symbol. And of course, you want to do that for both the green and the red. And then I always recommend, changing. You don't have to change this one, but you would change the main name of the window.
Yeah, the name.
Right. So pretty straightforward. It's just a multi-strategy window with a green and a red strategy, and then you just have to change the names in each respective strategy, and you're good to go.
Well, go back to configuration real quick, because I noticed that it's not defaulted to be set up the way you have it there for a single stock. So how does somebody get it to that single stock configuration rather than a watch list?
Right. So typically most people have theirs on all symbols, right?
Exactly.
Or they're excluding a list that they don't like to see, like me. For most of the stuff that I do, I don't want to see ETFs or iShares. So there's 4 different ways to make this functionality operate, but we're selecting single symbol because we're focusing on one symbol only.
Real quickly before we go away from this, because this is a great alert, good question here. How do you get the daily range in Watcher to show the visual range versus the percent range? Good question.
You're talking about this column here?
Mm-hmm.
So we don't want to see the graphical representation. We'd like to see the numerical value. Am I hearing that correctly?
Either or to switch back and forth, it looks like.
Right. So if we want to get rid of the graphical indicator, we just go to the cell right below the filter and we right-click. And then we go to Properties and just remove the check from graphical indicator, and then we get the numerical value. So
nice.
It was, yep, easy as that.
I actually just learned something. How about that?
And to turn it back on, we just come back to Properties and give it one of these, and then we're back with the graphical interface. On the same token, if we want to see text headers here, we just right-click and make sure that we are on text headers. And then instead of seeing the symbol or the icon for the filter, we will now see the English description.
Which makes sense for most new users rather than decoding those hieroglyphics.
I do prefer text headers myself.
Me too.
All right, just doing a little time check here. Let's see what do we got. All right. We're doing good. Okay, so we're going to move away from the Spy Watcher now, but hopefully everybody gets the gist of how that was being used to pretty much predict or react off of these bottoms here. Once we saw the bottoming wicks and the pathetic volume, that's never a guarantee, but it's high-quality information, and we react to it, and we see the result.
And the key is you've got to identify those brackets, those pivot levels, those ranges, and identify when the actual range break is approaching so you can monitor the volume.
Mm-hmm. Horizontal lines are very valuable in the trading business, ladies and gentlemen. Okay, so let's cruise on in and take a look at what our AI certainly put on a show today. It's no coincidence that as soon as, during this little choppy period right here, Holly started trading, I think, 5 minutes into the open today. Let's see.
Yeah, and was kind of like 0 for 7 or 0 for 8 in the first half hour of the day.
And as we always say, Holly's that statistical trader that is going to jump in no matter if the waves are a foot tall or 10 feet tall, right? So most humans sitting there standing at the beach, they heard there's going to be good waves coming in, but guess what? The forecast was just a little bit off. The wind wasn't as high, and there's just little 1 foot rollers coming in. You're not going to see any guys jumping in there, trying to ride that stuff. They're just going to be like, well, we'll try again tomorrow. Now, Holly, on the other hand, she doesn't care. She's programmed to do one thing and one thing only, and that is trade her statistically weighted sets, no matter what market condition that we are in. So we can see here, of course, Pacific Standard Time. Holly got busy 7 minutes into the open. And, in this little area right here, up until about 7:40, no coincidence that, a lot of these were small winners, small losers up until that point in time. Once we passed that time zone, we started seeing a lot more positions working for us. So just to recap here, what do we have? 1, 2, 3, 4, 5, 6, 7, 8, and 9 strategies show up for trading today. Of course, just because the strategy shows up does not mean it's going to execute any trades. So these guys down here never even signaled one trade today. These were the guys that spit out all of the action. 17 and 12, the majority of the trades were these two guys right here, but these guys spit out 5, 3, and 3 respectively. So Holly is always going to play statistical probability, and She's not going to win all the time, but then again, that's not what we set her up to be. It's just letting you, the user, see what happens when statistical probability is put in play in any market condition. So let's take a look at the all trades plotter. And by the way, just before we delve into that, after everything was said and done on the 2934, on approximately the 40 trades that were done here today, Holly was net gross 1.4 points. But as
that
we always
doesn't tell the story.
It doesn't even begin to tell the story. So we're going to resort here by time, and we can see, a little bit of a rocky start, and we can see here from the price graph. I think at its worst today, Steve, 1.6-ish, I think, about down 1.6, and then as she started adding more positions, the market started heading back up. We got back to the flat part, and then at one point jumped up to around 2.25 in T&L. So this is what we can see, and this is, Holly is designed, as we can see here, all of these strategies are designed around short intraday hold times. Holly's going to close those positions out no matter what the chart looks like, because that's what she does. But of course, we're made to interact with Holly. We can see things on the chart that she's not programmed to see. So her strong point are these statistically weighted entries, but we all know sometimes the timing is a little bit off. Sometimes when the pro blackjack card counter is sitting there counting the cards, just you get the string of face cards. The dealer gets a string of face cards, so he has to sit there and wait for the proper timing. And just like that, sometimes the timing is off just a little bit with Holly as well. So a tally of 1.4, that's kind of what we would refer to as, Holly being risk on and, getting out when she's supposed to, like a good human should.
Getting out at risk off, exactly.
Right. So what I'm going to do here is just quickly sort by closed profits, so we can see all the winning trades that Holly stacked up today, and then quickly give it another sort so we can kind of get an idea of the losing trades. So one thing just kind of stands out just by taking a glance here. A nice little string of losers, but all well controlled. 45 cents, the worst loser today. Best winner, $1, was MOS today. So Holly's always going to get out when she's supposed to, but we have to put our trader's hat on when we're interacting with her. Now, once again, she booked 1.4, not too bad, but take a glance at this column over here. Non-exit profit and pushing through resistance, which was responsible for 1.58 points today. Non-exit, 8.66 points. Float on, 1.06 points. Non-exit, 3.76. So if we tally up the non-exit profit, including, the little negative guy here, we get 13.36 points of potential alpha just by holding the trade. Now, the thought that's probably going through everybody's mind right now is, well, how do I know when to hold a trade?
Exactly.
And that kind of gets us to trade arounds. And that this is where the chart reading comes into play. So let's do this, Steve. Let's talk about some of the trade arounds today. And I think might as well just go alphabetical order, because one of the beautiful ones today, there were a couple of really good ones. Some made a lot more than others. But for example, let's talk about the first one. And of course, if we look at the exit reason on Apple here, the stop was hit. There used to only be 3 reasons why Holly would get out of the trade. The time ran out, a profit target got hit, or the stop got hit. She got stopped out. We've recently employed the profit save and the reduce risk functionality as well. So now we've got 2 more factors. So we've got 5 reasons why Holly we'll get out of a trade. So on this first one, Apple, we can see right here, this is where Holly got long. What does Apple proceed to do? And at first, it looked like it was, maybe going to pop her way. But as we always like to say, as soon as you see Holly get into a trade and get stopped out, to create a trade around, we're going to go back in, take that entry price, and create a limit alert here, which you can see 94.82 was the entry price, which, the green line here would have been the price limit alert. Obviously, the stock was down here when you created that alert. So once again, you set it at the entry price so that you'll be alerted to it once again, because the trade worked, the timing was just a little bit off. Didn't cost you anything to see Holly get stopped out of this trade. So look what happens the second time around. Once the market gets a little traction, once again, this is nothing more than a range break. Even if we play the top of that wick right there. Now it's breaking out, it's got some steam behind it. Take advantage of Holly's loss is your game. So that's an example of playing one that she got stopped out of. Now the next one, very different, ASPS. Here's Holly getting long. So of course, when we see a little pattern like this, these are some of my favorites. Micro consolidation, otherwise known as an NR7 pattern, where pretty much buyers and sellers become equal here, and that's what gives us this type of price action. So Holly's like, okay, I'm getting long right here. Well, 60 minutes later, we're up here somewhere. Well, that is the 740, so 840, and I think due to the profit save here on ASPS, the way that functionality is working is the longer that she's in the trade and it's profitable, the time decay is going to get us. So you can see Holly bailed for 10 cents. Now, if we're in this trade with our trader's hat on, there is absolutely no reason to get out of this trade, and then we can see what happened here. So wearing your trader's hat, no reason to get out. If you did want to set a stop loss, probably a couple of pennies below that little wick right there. But then, once again, hiding in this range right here is more alpha. So we're in a 200 lot, 300 lot, whatever you're comfortable with. Trade starts going your way. What do we have here once again? A range break. Perfect time to add to a winning position. Mm-hmm. So you make more than Holly. You add to the position when you see this very conducive range break occurring. You can't see that over here. You can't even see that in here. You can see what you would have made on a single lot, but adding to this position, you can really throw a multiplier on these nice setups that Holly is pointing out.
To simplify it for some of the people that may be looking at this for the first time and trying to figure out what profit save is and time stop, those are just other fancy words for trailing stop and risk reduce. Holly is always going to err on the extreme side of caution when it comes to the risk management. Doesn't mean we have to, and these numbers are evidently showing that versus staying in the trade. So the idea is Holly is a idea generator, and just because the trade was designed for 30 minutes, excuse me, and the clock is ticking down and it's 1 minute to go, and you're looking at it and saying, well, Holly's exiting here. This trade's green. It's positive. It's on the highs of the day. It's breaking out into the void on the daily chart. That's when you really have to ask yourself, why am I getting out with her? You don't have to. The idea is the value is in the idea generation. The exit really is up to you. It's a gray box type of environment. Black box would be turn it on, don't look at it, turn your back, let it do everything. But Holly was never designed to do that. Holly was designed to be an idea generator and then set a great example of risk management along the way. But we get days like today, if you're in one of those stocks that she's in, you're green, and she's getting out because the clock is expiring, you really got to ask yourself, is this the best move for me to do right here, or wait and see if there is more coming? I know we're all human. We're all wired as humans to fear that a stock that is going in our favor is going to pull back, when in reality we should be fearing that we're not participating on the remaining move. So just keep that in mind. It's a hard thing to overcome. It's human nature, but that's how we're all wired. But we've got to really check ourselves and ask ourselves when that situation comes, when it's time to exit a profitable trade that was generated by the AI.
Right, and I'm just trying to keep an eye on the time here, Steve. Seems like time is
Yeah, we got a couple of
pressed.
minutes. We're going to run a little bit early today, but we do have a couple more minutes. Where should we go from here?
Right, let's do this last trade around on CRS, and we can see Holly's entry point right here. And once again, Holly took a 15-cent loss on the reduced risk functionality. But once again, from a trader standpoint, Steve, if we're long right here, and then we're down, what was it? Maybe, let's see, the high of that bar was 31.94. It takes a little pullback, comes down to here. Below that was, it's about 20 cents, right? 20 cents from here to here. So once again, Holly gets stopped out. Now, whether you find this type of action comforting, right? A little mini consolidation again, probably a little in our 70 as well. Whether you decided, look, this price action is not scaring me. I saw Holly get long up here. We've had a little retracement. She got stopped out. Buyers and sellers seem to be pretty equal here. So whether you took some here, or once again, here's that same fractal pattern, that same range break, which was all over the place today. So whether you saw her get stopped out and we're comfortable with this being some nice support, whether it was right here or whether we drew a little line right here, then, once again, when the range broke, another excellent opportunity to take some of the CRS, which turned out to be almost a 1-point winner on the day.
Just to orient you guys, if you look on that chart, the blue tag on the right, whenever you double-click into a Holly trade, you get the arrow, which shows you the candle. But that candle can be a wide candle, so you move to the right, you look at that blue tag. The blue tag is the entry. The red tag is the stop. And you can see on this one, the trade was never really positive for very long and was slowly moving sideways and just kind of decaying. That's when we call the reduced risk steps in and says, okay, this isn't working. Let's just make sure that we cut this for a loss before it even gets to the stop. But that, again, doesn't mean that you don't have to keep an eye on the price moving back through the original buy point. It'd be worth your while to keep an eye on that.
Right, and as you can see down here was the hard-coded stop of 31.62, which, ironically enough, was never even really tested. It got close. So that brings up a good point. We can show columns that we'd like to see. So if we want to have that smart stop visible for our own benefit, did I already have it there? Yeah, the smart stop right here was 32 cents. So, whether you want to engage with Holly on the profit save or whether you go, hey, you know what, I'm in it, 32 cents is down here at 31.62, I'm holding strong, right? I'm going to, and it never even got down there. So, depending, and that's the beautiful thing, we give you choices. You want to go with Holly? You want to go with a hard-coded smart stop? It's up to you and whatever your comfort zone is. All right, Steve. So I know we have to kind of shut it down here 5 minutes early today. So we're not going to have time to get into any chart setups today, a la trend change lubricant style. So anything.
It's a new month. It's a new month next week, and we'll start marking them up again next week.
This is true. This is true. So Scott, if you're waiting in the wings, we're ready for you.
Yeah, thank you. All right. Yeah, thanks everyone for joining us today. And as always, we're providing a nice little incentive to bring you guys along on board. And if you use the code that we're offering, you can get 15% off. It's Trading Studio, all caps. Use that on checkout, and you will save 15% immediately off your order total. And if you know that we are a subscription as a service company, I think you might want to show the next slide there. We have regular Trade Ideas Pro at $99 a month or $888 per year, and that includes pretty much everything except for the AI, Holly, Odds Maker Backtester, and Limit Alerts, which are some of the most important features we've let out in the last couple of years. And the premium version is available for $188 per month or $1888 per year. Go ahead and use that code Trading Studio on your checkout for 15% off at checkout. And if you are currently not a subscriber, or if you're already a subscriber and looking to upgrade, just go ahead and do that. If you have any questions, email info@trade-ideas.com, or you can follow Jamie at QuantBot on Twitter and Steve at TodayTrader on Twitter. Facebook.com/TradeIdeasPro is how you find us there. and that's we post some original content there sometimes, so it's a good thing to do. Thanks, everyone. Sorry we don't have more time for your questions today, but we'll be back next week with the Trade of the Week. There's no office hours on Monday because it's a holiday. And we'll be at the Trading Studio again next Thursday. And there will be a QA session next Wednesday, too, at the usual time. Thanks, everyone. Thanks, Steve. Thanks, Jamie. Cheers.
All right. See you. Have a good weekend.
Friday, and have a great weekend.